If you want to trade with the big dogs, if you want to know what moves this market, if you want to trade like smart money, banks, institutions, and hedge funds, then you trade supply and demand. In my opinion, supply and demand is the only strategy out there that works because the only thing that moves the market is smart money, not retail traders. What's going on, everybody? It's Market Monkey Trades here. I'm gonna get into my trade today. I made $1,500 off it by using supply and demand. Before I jump into the video, I just want to shout out my Twitter here at Market Monkey, at Market Monkey LLC. We post our supply and demand setups, trade recaps, and overall thought process. Same thing with the Instagram live setups for you guys and P&Ls. No one is really doing that out there, so definitely check us out on the socials. Now, like I said today, $1,500 profit, really good trade. I'm going to show you guys my entry, my exit, and my thought process behind this trade. It's pretty simple overall, normal supply and demand trade. But I just want to start off the video by going over the first note I have here. Don't diddle in the middle. Now, yeah, that might be funny, but it's honestly such a good reminder to have, because all this price action in between zones is just retail traders. It's just noise. And if you start messing around in the middle of zones, you're going to get flushed out, and it's not sustainable. So, for instance, say you were a retail trader and you got long here for the break of VWAP. 5 minutes later or 30 minutes later, you're flushed out, all right? And flushed down through the 9 and the 200. Those little retail setups, the VWAP breaks or the triangle breaks, yeah, they're going to work time to time, but they're not sustainable for the longevity. So when you're trading supply and demand, you almost have an edge, right? Because you know where price is most likely going to have a reversal or a reaction, because that is where banks, smart money, hedge funds are trading. Those are the levels they're looking at. Those are the levels they're getting in at. And really all supply and demand is leftover smart money orders that get filled when price comes back down to that point. So today was interesting because we played supply and demand also with this triangle that has been forming over the past couple days here. Let me look at a bigger time frame for you guys. So we broke out this channel that formed over the past month and a half, and we've been really steady consolidating for the past week. And consolidation means low volume and most likely retail traders, and choppy markets for me is choppy profits. So like I said, don't diddle in the middle. Don't get in when it's consolidating unless there's big levels like this key zone. So I was looking at this key demand zone and this little triangle, or whatever you want to call it, bull flag, forming on the higher time frame. So really, I told myself I didn't want to diddle in the middle. I didn't want to get caught in this consolidation period we've been having for the past week. I only wanted to get in at this key demand level or these supply zones. Now I moved this demand up because it was like this, but over the past week, I've been moving up a little bit because we've been forming demand coming out of demand. So if anyone has questions about that, that is why. Now let me show you guys kind of what I was looking at in my thought process before getting into this trade. So whenever I'm trading ES, which is the S&P 500, I'm looking at what the S&P 500 is holding, because that's what moves S&P 500. Its majority holdings, and those being Microsoft, Apple, Tesla, Amazon. So I'm really looking at those stocks when I'm trading. When I'm trading ES. So, and obviously Nasdaq and Qs. So we've had an interesting week because we've had this consolidation period, but we've also been coming down to this key supply. And if you look at Qs on Nasdaq as well, we have this key supply. It never fully comes down and touches it, but we have this key supply, which is this, demand. We have this key demand, which has been forming on Qs, Nasdaq, ES, and Microsoft, and Apple. So it's a very key demand zone here. As you can see, Apple's key demand right here, Microsoft key demand right here, and this is the same level that ES is moving on. So just keep in mind, Microsoft and Apple, yeah, they're gonna have different price action, but their charts are gonna look almost identical, as well as ES. So ES's zones are gonna be at the same level as the zone. So if Microsoft looks like it's $2, $4 away, and it looks closer on ES, just know those are actually in the same spot. They'll reach their zones at the same time. All right. So I'm looking at Microsoft and Apple, and I see pre-market, we come down and we have a nice bounce. See this bounce? We have a nice bounce right here through VWAP in demand. So I know there's some buying pressure going on, immediate reaction at this demand level, and I knew going in that this was a key demand. I really wanted to play this level. If you can see, when we formed it on Microsoft a little while ago, we come back in, we formed it here, we come back in, have a nice rally, nice reaction. So I knew that if we came back in, we were probably going to have similar action. People tell you only trade fresh supply and demand zones. Honestly, price is going to come deeper and deeper every time it touches their zones. So just know that, yeah, price will probably break through a zone once it's came all the way in and knocked out all those unfilled orders. But some zones, it takes 4 touches to get all those unfilled orders out. And then you can fade the market to the other side once all those orders are filled, and you have demand turn supply or supply turn demand. So I don't really like that concept of only trade off a fresh zone. I think the probability is probably the same if you just mitigate your loss and understand how supply and demand works. So I really wanted to trade this key demand zone here that we had on Microsoft and Apple with ES, combine it, and having those indicators aligned, I knew this demand zone on ES was going to be pretty strong. So always have a hedge, because you can't just trade supply and demand once price enters these zones. To me, these are just zones of interest, right? You can't just hop in thinking that every time you touch demand, you're going to have a reversal to the upside, or every time you touch supply, you're going to have a reversal to the downside. That's not how it works, and that's not going to be sustainable for you in the future. Let me get into my second point. Sometimes price has a premature reversal before zones. And like I said a little earlier, see how Nasdaq and Qs, we've been flirting with this demand, but not quite touching it, but still having these big reactions. So let me show you Qs, for example. And when you're trading S&P 500, you have to be looking at QQQ, and NASDAQ. Why? Because SPY is going to have a reaction based on Q's and NASDAQ's price action, because their charts are essentially the same and they essentially track the same companies. So we have this key demand, and you see we come down. Let's do the 1 hour. We form this demand here, and we come down, and every time we come near this demand, we don't quite touch it, but we come near it and have a demand-like reaction. So we flush down, drop, base right here, rally. But we never touch demand. Drop, rally. Never touch demand still. Come over here, which is where I took my trade on ES. We have this drop, base, with a big reaction in pre-market, and then rally. So I knew maybe I drew my zone wrong, maybe volume and price action with different market context was causing these reversals, something I missed. So I made sure to jot down the note that sometimes you have these premature reversals before zones. So don't just automatically set a limit order at these zones, because that's not how it works. Again, you're gonna get flushed out. You can't trade like that. So sometimes price, like, let me show you on ES, it will come down and it won't fully touch the zone, but it'll be pretty damn close. So you can't just have a limit order waiting at the zone. See how it comes down? I played this demand bounce, and I knew because we had those reactions of not fully coming into the zones, it's probably going to have a similar reaction. So I played that with other indicators like Microsoft and Apple in their demands, bouncing off their demands. I knew I was going to take this market long. That's what I did. I think I hopped in 10 contracts, broke VWAP, and I held all the way to supply, because you can't diddle in the middle. When I'm long at demand, I take profits at supply. When I'm short at supply, I take profits at demand. So it's very key to know that. And my last note, price action gives great market context when there's heavy volume. So the price action was pretty crazy today when I got in this trade. But the bids were, when I talk about price action, what I'm talking about is level 2, time and sales, and also just volume in general. So I'm looking for a hedge when I get in to my positions. You can't just get in at supply and demand zones. You have to have a hedge. So what's my hedge? Volume mixed with market context and price action. There was huge bids coming in, and once you have a lot of screen time, this will come kind of naturally to you, and the tape will be moving in a way that's so familiar to you that you'll know that you'll want to get in for that entry. So I felt that I saw big bids coming in, and the bids were being supported, as well as big lots actually coming in through the tape, and just the way the tape was moving and the way price was moving and skipping and jumping with all the volume coming in. It felt like we were going to have a big demand reaction, and that's exactly what happened. I caught calls down here, held all the way up here. Basically, it took all day to reach that point, but I locked it in, $1,500 profit, and overall, a very, very good day, very good trade. But that is going to wrap it up for my video today. Make sure you like, comment, subscribe, and I will catch you in the next video.